quick. So we know this could be a higher time frame sell side, or like a higher time frame fair value gap, higher time frame order block, whatever you want it to be. Okay, as long as it's PD array, and I look for some sort of fair value gap to be inversed here. Okay, so something like this. Okay, let me just do this real quick. And obviously what I've been showing you guys is, okay, we go long at the inverse, right? So something like this, okay, where we haven't hit internal liquidity. Okay, so in this scenario right here, internal liquidity is going to be here, okay? And let's say external liquidity is up here. Okay, so the way I've been really teaching this model for you guys who have been watching the videos is when I'm looking for this setup right here, okay, let me just make this a little cleaner. When I'm looking for the setup, I always say don't go long if we have not hit internal liquidity, okay? Why do I say that? What's the big thing and why I say that? Like, why do I say don't go long if we've done this? Yeah, but why could we reverse? It all has to do with what? The word starts with a B. Yes, bias. It all has to do with their bias. So what do I say about the bias and why I say don't take this? Even if there's some, like this. Exactly. So if my draw on liquidity is wrong, let's say I think this is buy side. Let's say, okay, I think this is buy side liquidity. BSL stands for buy side liquidity. So I think that we're going to go to buy side. Okay, but if my bias is wrong, okay, then we're going to do like this. So do you understand why I say like don't long unless we have not hit the internal liquidity? Because if your bias is wrong, we're still at least probably going to hit the internal liquidity and then reverse. Does that make sense, everyone? Like on why I teach it like that? Type 1 or 2. If it makes sense. Okay, so basically I teach it like that because if your draw on liquidity, the buy side is wrong, okay, then this right here is totally going to fail, okay? So how I teach it is we cannot even hit the internal liquidity, which could be market structure shift for some people. See how this is could be like, oh, retail traders be like, oh, this is a market structure shift. Now I'm going to long. So I'm basically longing before the market structure shift. So I think that's the big takeaway from last week. Okay, so I'm going to kind of teach this now. So we now understand that this is going to be the highest right here. This is going to be the highest possible win rate, okay, because we're always going to get at least a free trade out of it because you at least know we're going to internal liquidity. Yes, I'll do a live example in a second. So you all know we're at least going to go to this, and this is the highest win rate model. But what I haven't been telling you guys is you still can, okay, you still can take a setup like this. Okay, you can still take this if this is an inverse and if you think, okay, so there's obviously going to be a lot more opportunities now that you know you can take a setup like this, except that this, okay, you have to have a really, really confident bias, or there has to be some sort of major equal highs above, okay, or you just have to know we're in a market maker buy model. Okay, so we know this has a very high win rate, okay, something like this. Okay, this is a very high win rate. I would say about 90-95% win rate. I would even say 100, but obviously nothing's 100% win rate. But this could even have a 100%. I've seen people have a 100% win rate with this. Okay, now this still has a high win rate. This still will have a 100% win rate if your bias is correct, okay? And that's why it's important to watch my draw and liquidity videos, because if you can have a right bias, some people are like, oh, if we get this set up, some people have been DMing me. I know John Cameron's an example. John DM'd me the other day, okay? And I'm not going to show it, but I'll show it on you in a second. But basically what happened is we got this setup where he said, oh, I saw this inverse, but I didn't take it because we hit internal liquidity. Okay, which is fine, which is how I've been teaching it. but you can still take it even if we hit internal liquidity if you really are really confident in your bias. So if you're not confident in your bias yet, okay, which I know some of you probably aren't confident in your bias yet, then I would stick to just taking this, okay, where we have not even hit internal liquidity, where you know there's still a good chance we're going to hit internal liquidity. But if you see really, really perfect equal highs up here, maybe 3 equal highs in NQ, okay, maybe it's a market maker buy model and you're really confident it's complete up here, then yeah, go ahead, take this setup even if we hit internal liquidity. Okay, that's completely fine. Okay, so if you're not confident in your bias, okay, I would stay away from these for now, but you can still backtest these. So I'm going to basically show, before I move on, does everyone understand that this is still a valid setup? Even though that's not really what I taught last week, even though I said this is a worse setup. Okay, obviously this is going to be just a little worse than if we have not hit internal liquidity. Okay, but it is still valid. It can still be valid at times. Okay. If you're confused, just stick to this model. Okay, just trust me. Stick to this model if you're confused. If you don't even want to risk losing, which you're going to lose obviously on this model too sometimes, but not as much. I would say this probably has like an 80% win rate if your bias is solid. If your bias is perfect, well, this is obviously going to have like a 100% win rate. But if your bias is solid, this is still going to have an 80% win rate. And why some people might, yes, it's a worse setup if you're not confident with your bias, exactly. And, okay, why some people might like this better is because this does provide more setups. Because some of these setups will happen and you'll be like, oh, we hit internal, I can't long this. When maybe you can because you know there's still bias set above. Okay, but you have to be confident about the bias. And try fast. What's the reason this could be invalid? Okay. The reason why I haven't been teaching this one lately and saying why this is not a bad setup, or why this is a good setup, is because if we hit internal liquidity here and your bias is wrong, we're just going to dump through this. So that's why I'm saying in some instances, this is going to be invalid. It's going to be invalid for the people who do not have a good bias. Okay, so yeah, so that's why I've been teaching it like this lately, where we have not hit internal liquidity, because it's just easier on people. What percentage would you talk? So yeah, I usually take at least 50% off at internal liquidity. So like if I'm entering long right here, I'll take like half my position off here and then I'll look for higher time frame targets. I did go over in a video where I will take off full here. The only time I'll ever take off full profits here is if I'm very bearish and I think we're going to reject some higher time frame fair value gap, like right when we hit it, and then go down. That's the only other time I'll ever take off like a full position. Does that make sense, everyone? There has to be some sort of higher time frame fair value gap to the left, and we have to be bearish in the higher time frame. That's the only time I'll ever scale like a full position here. Okay, does that make sense? Type 1 if that makes sense. Okay. Okay, so that makes sense, everyone? Okay, so I'm just going to go over the live example. Okay, so if we take a look at Euro, okay. Let's go to like the 5-minute chart here. If we take a look at Euro, okay. So I'm just gonna go to replay mode. Okay, based off my model last week, okay, you can see we hit sell side. Okay, we purged a low, which is good. Okay. Now, tell me, type 1 in chat. Okay, type 1 in chat when we note along. I'm just gonna play it slowly. As I need to, alright, I'm actually typing 1 here. So we note along here. Okay. So we know, okay, now all these are inversed, right? Imagine this was just a single time frame, one for every gap. So we know all this is inverse. So at least we know we have to hit this next high. Alright, we have to. We just have to. That's how the market works. So my drawing lock is on for some reason. Okay. Why is this on? What the hell? See, I'm not turning this on. I don't know why it's doing this. So, okay, there's 2 ways you can do this. You can either market by now, or you could put a limit at the retrace. Okay, and I guarantee you more than half of you are going to wait for the retrace just because it's better risk reward. And if you do miss the retrace in this situation, you're not going to care that much. Okay, does that, hopefully that makes sense to people. So let's pretend, okay, I'm going to take the retrace. I see we closed above all these 3 fair value gaps. Okay, I'm now interested in taking the retrace. So I wait. Okay. Next candle. Next candle hit the high. Okay, so based off what I've taught, okay, in the last few weeks, is this valid now? Now that we hit the internal high. Yeah, nope, this is not valid anymore. Okay, so basically what I'm saying to you now is this can still be valid. Okay, and this is all where it comes down to bias. Okay, now if we take a look at the 5 minute, okay, we hit internal liquidity in the 5 minute, it's fairly obvious. Okay, now if we go to like the 15 minute, okay, and look for the setup, have we actually hit internal liquidity on the 15 minute? And or is there anything else pointing us that we may go up? Yes, it's a scam. If you get a friend request from me, it's a scam. Just mess with them or waste their time on purpose. So, is this valid on the 15-minute setup? On the 15-minute time frame? Based on what I've taught. Yes, why is it valid? There's a specific reason to why this is valid now. Okay, yeah, why have, yeah, but we took this high. Why we've taken this high? Someone argue with me. Alright, what's the short-term high in this situation? What time? What time? Someone tell me what time. Yes, 7:35. Or 7:45. Okay, why is this the internal high and not this one now in the 15-minute time frame? Boop, you're gonna get banned. Just letting you know now. So what's the yeah, exactly. So now on the 15-minute, okay, when I switch over from the 5-minute, which this is the swing high, to the 15-minute, see how the swing high changes? So see how, like, if you are paying attention to the higher time frame, you see, okay, well, the 15-minute did close over this, did not hit the swing high. We have lower resistance liquidity above. Let's pretend these are perfect equal highs, maybe. Perfect low resistance liquidity above. Perfect equal highs. So based off the 5-minute, would it still be okay in this situation to maybe long even though we hit the 5-minute internal liquidity? Yeah, so do you understand the difference between this week and last week and how this setup can still be valid even though we hit internal liquidity? Does how I'm explaining this make total sense? Okay, so again, you're gonna see this sometimes where, yeah, maybe we hit the internal high in the 5-minute, such as right here, but if you go to the 15-minute, this is still valid. We still close above, and we have not hit the internal high in the 15-minute. Okay, so now I'm thinking, okay, well, I can still wait for the retrace. It's still valid. I'm buying the retrace right there. Okay, buy. Right inside the 15-minute inverse. Okay. And I'm just going to sell at the next high. Okay, so like, I guess right there. Okay, so in this situation, it's kind of contradicting what I taught last week, because last week I said if we hit the internal high, don't long. Okay, but in this situation, you can see, like, if we go in the 15-minute, we really have not hit the internal high in the 15-minute. Okay, now some of you are going to be like, oh, well, what if you go on an hourly and it's still there? Okay, if you go, like, you always want to go the highest time frame where the setup's valid. Okay, so you can see it was valid in the 5-minute at this time. It's still valid in the 15 minute. Okay. Now what if we go to the hourly? Is it still valid in the hourly? Why no? Yeah, exactly. There's no fair value gap. Okay, there's no fair value gap anywhere in here. Do you see a fair value gap? If you say yes, you're blind. But exactly, there's no fair value gap. There's no inverse. There's no nothing here. So the highest time frame you can see the setup on is the 15 minute. So that's what the time frame I stay on. Okay, and that's why you can still long, even though we hit internal liquidity. That's why you can still long on like the 5 minute, based off the 15 minute. Okay, so hopefully this is clicking for some of you guys. All right, so let's say, okay, let's say this is the internal high. Okay, and I go in the replay mode. Okay, let's say we did hit the internal high. Okay, let's say this candle took out this high and now we're going down again. Okay, let's say this happened. All right, let me just see if I can make this. So the candle now looks like this. Okay, and let's say there's like 5 perfect equal highs like right here. Okay, let's pretend there's 5 perfect equal highs right here. Let me just do this real quick. Okay. So let's say you see something like this. And we hit internal liquidity here. And let's say, so I'm going to actually do 2 different scenarios on this one. Okay. Now, first scenario. We took out the internal high. We swept the low. Okay. But we're delivering from a fair value gap. And we have 5 equal highs above. What would you rate this setup and would you take it? So rate it A through B and would you take it? Yes or no? B, no. A, yes. Okay, so I would rate this more of a B. Okay, because we are delivering from a fair value gap. Okay, and me personally, I probably want to take this. What I would do is, because this is the 15-minute time frame, yes, maybe I'd go in the lower time frame, like look for a confirmation setup off this, but I definitely wouldn't blindly long it. Okay, now what if this fair value gap wasn't here? Okay, so let's just say this wasn't here. Okay, let's say there's a wick right here and this was all closed. Okay, so something like this. Okay, and now, what would you rate this setup with the equal highs above and the low purge? Okay, what would you rate this setup now, and would you take it? Yeah, so I'd probably rate the setup probably an A here, maybe A minus, and I probably would take this setup because, yeah, even though we hit internal liquidity, which is against really what I kind of been teaching the model, we still purge the low and we still like 5 times equal highs above. So yeah, maybe this doesn't have a 100% win rate, right? Like if we don't sweep internal liquidity because you don't know if we're gonna go back. But I would assume if you ever saw yourself in a situation like this and we had 5 equal highs above, we purged the low, we got really nice displacement up, inverse fair value gap, I would assume no matter if we hit internal liquidity or not, we would probably go back up here. Okay, so just because we did hit internal liquidity, I'd still probably give it an A minus for myself, but I'd still probably slap this because I would think it's going to risk reward. Okay, in this situation, I'd probably just blindly buy here. Like, I wouldn't even look for a confirmation setup. Versus in this situation, I'd look for a confirmation setup because there's no guarantee, or there's no like guarantee we're going to bounce off here because in this situation, we're delivering from a fair value gap. Versus in this one, I think there's a better chance you're going to just blindly long up here and the chances will go purge the low again is probably very rare. Okay, does that make sense, everyone? So do you see how I'm kind of expanding into the model I taught last week? And I'm kind of combining it here with bias a little bit and what's going on in the higher time frame rather than just Okay, if we have not hit their internal high, you long, whatever. So see how it's getting a little more complicated now? And this is where, if you study the model in the first place, you can get very complicated with this. Couldn't you still take it if that bearish 15-minute fair value gap you drew earlier gets inversed? We would have already taken some profits in internal. Yeah, so Azar is saying, well, what if you already longed, like, right? So you're saying, what if we already longed right here, and you already took some profits right at this internal, or at this internal high? So you're saying you longed this candle and you took some profits here. Okay, so if I long this candle after we close above this, thinking, okay, so in this situation, I'd probably be doing this. So I'm long it here. I see these internals high here. Okay, because I see this internal high and then a major wick above, I'm probably not going to sell any at this internal high. I'm only going to use this internal high to be like, okay, well, I'm going to put my stop to break even here because this is really nothing. I would want here instead. So I'd buy here and I wouldn't move my stop to break even. All right, now I move my stop to break even after I hit this high. And then I'd probably get stop to break even here. And now I just want to re-enter. So in this situation, if I just base it off the 5-minute, I'd probably be entering here off this market close. And I'd move my stop to break even here and I wouldn't sell any here. Okay, I know we know the market has to go to this high, but this is not a good take profit, right? That was barely any pips, okay? You probably want at least this high. So if I did this, I probably wouldn't even be re-entering the 15-minute setup. Okay, but if you were smart and did you not realize how small a profit would be? Thank you. Yes, that's why I wouldn't take any profit here because this is way too small for me. So if I realize this, okay, I would say the majority of the time I'm probably not taking the setup because, or I would, but I just put myself to break even here. And it's a little complicated, but let's say I was in the slide position. Okay, let's say I just saw this. Depends on the day, but honestly, in this situation, let's say this is ES. Most of the time, I would probably just take like a contract here, just a single contract, and be like, okay, I'm gonna move my stop at the high at this break even, see what happens. So I buy a contract here. Stop at break even. Okay, let's say I get stopped out for break even. Okay. Now that was a single contract. Okay. Now maybe I'm like, okay, well, on the 15-minute, this is still inversed. I see we have a hidden internal on the 15-minute. I'm going to try re-entering with one more contract down here. Okay, so let's try I do that. Okay, keep in mind, this is only one contract. And then, because this is a bigger play, I'll probably sell here. Okay, so in this situation, I'd probably only do one contract for this and one contract for this. Now, let's say I entered way more than a contract here. Let's say I went full size and my stop was like below this inverse. And when we hit this high, I move my stop to break even. If I went like heavier size in this play right here, this close above here, I probably wouldn't be re-entering this because I don't really like to re-enter full position plays on like the same setup I just took. So if I didn't catch the 15-minute in this situation, let's say I didn't realize the 15-minute was going to close above, and let's say I was only on the 5-minute, then yeah, I'd probably take a position off this close, and I'd probably get stopped to break even, and I probably wouldn't even take this retrace because I'm not going to take the same position. Okay, or let's say in live time, I realized the 15-minute was about to close over, so that will stop me from taking this candle close because I'm like, oh, well, this candle is going to close above. But so it's a 15-minute. So now I'll see if I get a 15-minute retrace, and then I'll go long. So honestly, like, it really depends on what I'm thinking in live time. Like, if I notice the 15-minute closing over as well, I will not take the 5-minute. Okay, I will not take this because I see the 15-minute has a bigger opportunity. Does that make sense? But sometimes I won't realize that. Okay, sometimes I'll miss something like that, which is why it's important to be looking at every time frame. Where do you put the stop loss? I put a stop loss if we close back under. So if this candle went all the way down and closed right here, I would get out. If it wicks under, that's completely fine, right? If it wicks like this, I'm not getting out. I'm holding. Yes, all the time. This is a BPR right here. This is a BPR. I just call it a version because I like to keep the names the same just so everyone knows. So this is a BPR. All right, see how they're... Yeah, so that's going to be another class for sure, Greek. I don't want to get into that right now. Sometimes it will change a stop loss. Like, I don't know. Like, let's say there's... So this is the 15... So let's go on this time frame. This is the 15-minute inverse. Sometimes there'll be like a really textbook OB sitting down here. And, like, we'll come down and we'll close under the fair value gap, but still hold the OB or something like that. I'll stay in. It depends on how heavy I am. But that's a whole different situation. That just is that's just a whole different situation. And yeah, BPR is more high probability than inverse, but inverse is also very, very high probability. So let me go to Euro USD. 15-minute inverse just occurred, you said. Yep, exactly. So in this situation, there actually would have been no way to get in. Okay. So in this situation, see how in this situation a BPR is basically what I've been teaching, Burr. A BPR is when they both align, the bearish and bullish fair value gap align. So let me see. Why is this so hard to find? Okay, I'm not doing that. So, like, in this situation, does it actually give you an opportunity to enter how I teach? Yes or no? No. Okay, but let's say you're very confident that we're going to go to this low right here. Let's say there's like 5 million equal lows right here. Okay, let's say it looks something like this. Okay. Then could you technically, depending on how you trade, could you technically still take this short? If there's like 5 million equal lows down here, we purge buy side, yes. And for the people who are saying, okay, yes, maybe I would take this short, you got to understand at the end of the day, the higher probability trade is always going to be if we have not hit this low first and then retraced. That's always going to have like the 95, 100% win rate. This right here with equal lows pull, this is still going to have an extremely high win rate, 85% to 90%. But you got to realize something like this is just going to fail a little bit more than something like if we did not hit this low here. Okay? Does that make sense to everyone? So, but it also, this right here, this will give you more high probability, or this will give you more opportunities, because what I've been teaching doesn't always happen. What I've been teaching lately is, yeah, don't short if we hit the internal low, which a lot of times something like this is going to happen, where we hit that low and you can't take this. But at the end of the day, if you're very confident the bias is bearish, then yeah, you can still take this if you want. You just have to understand it's just probably a little less than a 95% win rate. It's probably like a 85, 90. Okay, the win rate's all going to depend on your bias, to be honest. It's how accurate your bias is, how accurate the play is going to be. Versus the first version I kind of teach doesn't really impact your bias. Like, your bias doesn't impact the first version I teach a whole lot. Inverse 3 minute. Let me check this out. So, yeah, right here, perfect example. Okay. So we purge the low right here. Okay. Right, we purge the low. We've now inversed this on the 3 minute. We have internal up here. Okay, so like in this situation, no matter what the bias is, I would expect the market at least to bounce out this and go hit this high. So this is literally a live example right now, so you can see if this plays out. Okay, let me just check the 5 minute. I like checking over, so the 2 minute inverse as well, the 1 minute inverse as well. So again, going back to the other lesson, we know the market at least has hit this 1 minute high, okay, because the 1 minute was inversed. But if we go to the higher time frame, for example, the 3 minute, we can also confirm that, okay, even if we hit the 1 minute high, we could still take this retrace because we haven't hit the 3 minute high. And the highest time frame you can see the setup on is the 3 minute. Right? If I go to the 5 minute, there's no fair value gap here. The fair value gap is closed. But if I go to the 3 minute, there's still the fair value gap. So I go to the highest time frame where you can see it. And you can actually see it in the 4 minute too. And the 4 minute high still matches up with the 3 minute high. So 4 minute, 3 minute, they all match up. Okay. Yes, this would be a buy. Okay, so I'm not gonna watch this because I personally think this is trash. I don't like trading this. We'll see if this works, but I think just the highest win rate you're gonna have using this is definitely the indexes. Any strategy you use is always gonna be the indexes, the higher win rate. I've seen like this. I think this is gonna work, but like CAD JPY is not high probability. I think this is a little more high probability than CAD JPY. So, like, you just got to be careful on what forex pair you're using this on. Something like this, I think this is fine. This is gonna still have a high win rate, but like there's bad forex pairs I've seen that I can't read. This one should keep going up here though, because I like this one. I like this one. I like Euro USD. I like what else I like? There's one more I like. Okay, so there's the high. Boom. So again, see how like in this situation, so you just saw the play out in live time. So again, see why the win rate's so high? Did I even actually just take that? You took that? Well, now you can see why I trade this. So again, we know the market has hit that high. But again, I like this one. I like Euro USD, and I like JB. I like GBP. I like GU. That's the other one I like. So yeah, I'll signal some. If I see a setup like this on ES, hell yeah, I'm definitely signaling this. And see how it matches up. Like, see how it matches up like with this. See how we create a new fair value gap here and it matches up. Yeah, I know. I didn't even try to signal that. It just appeared. And now I got a nice pump. So now, what would I do? If I look at the higher time frame, let's see what the higher time frame looks like. Higher time frame looks like we took major sell side. Well, the body held this. So would I leave runners in a situation like this? And it looks like we have low resistance liquidity. So would I leave runners in a situation like this? Yeah, so the higher time frame supports going up more. So I probably, in a situation like this, I'm only scaling 50% here. I'm going to hold like another 25% to this high because the higher time frame supports us pumping a lot. Okay, and I wouldn't be surprised if we pumped overnight if I look at this chart tomorrow. So the higher time frame supports us pumping way more. So if that's the case, I'm going to hold runners. I'm going to hold at least 50% of my position. Let's say like no higher time frame low is taken out. Okay, let's say this wasn't taken out. And let's say we're not delivering from a bullish fair value gap. Then I'd probably only leave like runners in this situation. If there's only low resistance liquidity and we didn't take out a low and we didn't bounce from any higher time frame fair value gap and there's only low resistance liquidity, I'd probably only leave runners. But in this situation, we got like three things where, yeah, we held the higher time frame fair value gap, we took a higher time frame low. I'd probably hold like 50% of the position at least. Okay. So again, teaching this model is one thing, but teaching this model in combination with the higher time frame, that's how you can really get these big positions. So we should go for this. You can see now this was inverse as well. So I want to see. So now, like if I was trailing my stop in this situation, I'd trail my stop and I'd cut this position. I'd cut it if we close back under this. Okay, that's how you can trail your stop. No, the inverse fair value gap is the market structure shift. I'm in the trade before you get the market structure shift. Okay, so we should hit this high. Yeah, so it's kind of like an early market structure shift. Yeah, you could totally average in if you wanted on this inverse. Okay, this should blast above in a second. This is 4x. I've seen 4x just come up to the high. Okay, there it is. So there it is. So now what I do is I'd scale like everything, and now I just hold probably a few runners and see how high it goes. So again, you can see just a live example playing out there. Perfect timing. Thank you. Dude, I need a bot that tells me, like, I need a bot in my Discord that says, oh, this 4x pair, inverse. Right? That'd be sick, because I can't, if you never said anything, do you really think I would have gone on this chart and looked at this? Nope. So, again, I just use this in ES and NQ. It just makes the most sense because it's easy to look at, but you got lucky, you saw it randomly. So in this situation, let's go back to the ICT basics. Would we be looking to short this for a 2022 model? Yeah, why would we not short this as a 2022 model? Yeah, we never really purged a major high, and also we also swept sell side. So we filled in the new week opening gap. We swept a decently major low. It's not super major because there's a lot of lows surrounding it. But I mean, if we go to the 15-minute, you can see it. If we go to the hourly, you can't see it, right? See how it's not a swing low in the hourly? So you can see this low up to the 15-minute, which is still a decently swept low. So I would probably not be using this for a short or for a 2022 model. I'd just be using this as a potential inverse. Okay. Now let's say the candle closed like right here. Would I take this as an inverse at the candle close like this? Would I take this inverse at the candle close like this? Why yes? Why no? Why no and why yes? It's not that an internal. It's because if it closes like this and we come and retrace, that means it would be reacting or it would be redelivering from a bearish inverse or from a bearish fair value gap. What if it closed like this? Then yeah, I would take this one. Because in this situation, we have not hit the bearish fair value gap yet, and we have not hit the internal high yet. Okay? Yes, Bert. You generally want it to purge the next low. Yes, Andre, I know you probably know what I'm talking about. You probably just never saw closely. Yes, these classes are recorded. This means you do nothing. Okay, you don't longer short in this situation because you can't short because we already hit sell side, so why would you short this? Yes, I know, Lamp. I know. I'm just not doing it because I'm away from my keyboard. But in this situation, you wouldn't short because we already hit sell side, and you wouldn't long until this is inverse. So you really wouldn't do anything in this situation until it's inversed. No, so the only way you're never going to need a bias for this strategy, okay, the only way is if you're doing exactly what I taught last week, where we cannot hit internal liquidity, and then you take it, because at least you know we hit the internal liquidity. Okay? But if you really want to hold for these higher time frame targets, then yeah, you probably want to bias. What is my weekly bias for NQ and ES? I'll tell you in premium chat. I'm just kidding. All right. I am looking for bullish setups for now. Probably up to like... So I want this week to consolidate, if anything, because I want this to be closed as a weekly fair value gap. So I don't really want us to... I don't want us to go like this. I want us to consolidate and maybe make an inside candle this week and then get a fair value gap and then reject that fair value gap. So I would say it's between neutral and more bullish this week. And I already posted my longer high time frame buys. I think we're going to go down here eventually, but I think it's too low to short right now. So just the short-term buys, if I was day trading, I'd probably be more neutral or looking for bullish setups. Therefore, if I did take a short, tomorrow, I probably would not hold past low a day. Okay, unless we really, really displaced. I'm a scalper if I'm going against the trend, but I'll hold for. I've called 50-point moves in my premium chat before. It just depends on how the conditions of the day, you know. I've literally called. I think I've only called one 100-point play ever. Maybe two, but like, I would say 75% of the time scalp. Nah, 65% of the time scalp. 30% day trade, like 50-point plays, and 5% I'll hold like 3 hours, and I'll just hold a runner. So, I think that's not a swing trader. Not really. I don't like swing trading. I cannot sleep and be in a trade. Yeah, there's no spread on futures. If you want to cleanly trade, switch to futures for sure. Yeah, options are the only thing I'd ever swing. I'd never swing futures. Would you enter if it retraced into an original inverse fair value gap? If it was already respected but hit, no, I would not. If it hits the ITHs, then no. What are the downsides of futures? Downsides of futures are you can't swing because, I mean, if you're sleeping and you get reversed on and you don't have a stop loss, you're gonna get wrecked. I would say the upsides of futures are you can set a stop loss overnight, unlike options. You can't set a stop loss. Downsides also, you have to be very, very precise. You cannot use indicators with futures because you have to have very precise entries. I don't know how people trade futures without using ICT or something else profitably. I mean, you would. I'm just saying. You just have to make sure you always have a stop. Inverse fair value, yeah. TJR is trash. I don't even know what he does. He's trash. What? Dude, he teaches some of the concepts wrong too. I mean, no hate to TGR, I respect his hustle. But, I mean, yeah, I guarantee you TJR is one of those guys who watch half the mentorship is like, oh, I got this. I'm going to start teaching break a structure and sweeps, and then we're going to be profitable. Like, yeah, no, you can't just do that. He's some TikToker. So, in this situation, we now know this is inverse, but we already hit the high. So, what if I was super, super confident we had a million equal highs up here? Would this maybe not be bad long? Probably not. But I would say we just took out this high. So we just took out like 3 highs. So at this point in time, there's probably no situation I'd ever long this. But I could definitely see this working because there is still more liquidity we have to purge. Yeah, never trust a TikToker. Yes, it does, Jose. Honestly, like, yeah, I guess price will move faster if there's no speed bumps in the way, like a fair value gap. Go over gold. I think gold's gonna go for this low. Who was in my live stream, my free live stream? What did I say? I literally said I already talked about gold the second I was like the first thing I talked about on my free live stream. I said 2 targets. Where are my 2 targets for gold? Yeah, he's probably profitable, but he doesn't. It's like an off-brand ICT. I guess his psychology is probably good. So, does anyone remember what I said about gold? The first thing when I said. I'm sure there's people in my live stream in here. If no one says it in the next 2 minutes, I'll just say it. Yes, I was saying I was bearish on. Where are my targets? I was saying I was bearish. Where are my targets on Friday that I said on gold? There's 2 targets. Yes, that's what I said. So I said my target was this inefficiency, and then I said I would hold runners till this low here. Okay. And John, are you still in here? You realize Mona is just doing it to get money, right? I'm in a group chat with her. She's getting paid from that. Yeah, dude, what is that thumbnail? See, that's another reason why I don't like TGR trades. What the hell? Yeah. Alright, is there anything else I want to talk about? So, see how this worked? Okay, see how, like, what I taught you guys earlier is you can still take a setup like this, okay? Like, this will still work. Why is this working? Why am I not surprised this is working? Even though we hit the internal high. Exactly. The higher time frame is pretty bullish here, so that's why this is working. And again, I think we're going to go. I think this is going to be buy side. At least this, and then we'll see how higher. So again, does everyone understand how this setup relates to the model I taught earlier? Even though we hit internal buy side, does everyone see that correlation? Like this setup can still be taken as long as you are very confident about the higher time frame draw. And we knew in this situation the higher time frame draw is bullish. So, yeah, I think that's gonna end it here. Okay, I think that was really the big thing I want to talk about. I'm gonna probably post this recording in my announcements, and I'm gonna show the setup I actually point out in live time because that was pretty sick. I don't know why. That always seems to happen in my Sunday night classes. I'll teach something and I'll see it happen in live time. I don't know. That's happened, like, this is like the 5th time, but yeah. I will see you guys later. Premium, I'll see you tomorrow. Reminder, I go to New York City Tuesday, Wednesday, Thursday, so I'll try to join live, but I won't be able to screen share. And yeah, peace.